Joining me now is Dino Kos. He's the managing director of Portales Partners, was also, by the way, a former executive vice president at the New York Fed, and he's joining us from the New York studio. And Dino, great to have you with us, and certainly good to get your perspective, because we've been talking a lot this morning about this sort of increased clout of Volcker and what that means for the other members of his economic team. Does he push out, does this come at the detriment of others, such as Geithner?
Well, we've certainly had a shift to a more populist stance, and this is kind of an interesting marriage, if you will, between Paul Volcker and some of the populists in the White House, because Volcker has been talking about these ideas for more than a year. This was in a Group of 30 report from the fall of 2008 that he first advocated this and other ideas. These were largely ignored until the Massachusetts elections, and then the politicos in the White House picked up on some of these ideas, ran with them. It's a way to be seen to be, if you will, going up against the banks, being on the side of Main Street against Wall Street, and you get the benefit of having Paul Volcker behind the president, and you get Volcker's credibility so that it looks less political than it otherwise might have.
But my understanding, and Peter, you can confirm this, right? I mean, this, for instance, this limit on proprietary trading was actually talked about even before the Massachusetts turnout, right?
Well, the White House has made the argument the president made a decision back before Christmas to buy into this idea of Paul Volcker, but it wasn't part of the original Obama plan. And Dino, if I could pick up on that, what do you think the chances of this actually clearing Congress? Should banks brace themselves for this actually becoming reality?
Well, you know, the president's going to put a lot of his political credibility behind this, so you probably will get something, but there's a lot of details to work out. The definitional issues are really, really difficult. What exactly is proprietary trading? You know, what is customer-driven trading? These are difficult issues, and the banks are going to push back. They're going to make the argument that actually this would decrease liquidity in the markets. It would decrease credit into the economy. And so there will be some strong arguments. There will be pushback from the banking industry. You are going to get some support on the Hill. So my guess is that whatever comes out is going to be, you know, much more diluted than maybe the most extreme versions of such a plan.
But even so, Dino, I want to get your impression, because I was reading, for instance, a Citigroup report last week talking about this regulatory overhang on the banks, saying that basically the banks are getting nickel and dimed, and they're going to be getting nickel and dimed basically for the next who knows how long. I mean, is that kind of how you view it?
I think that's a great point, actually, because we have seen a number of things that are in the pipeline. The Basel Committee and others have already said they're going to increase bank capital standards. You're going to have tighter liquidity standards. Then you had 2 weeks ago the bank tax that the president announced. Then last week, of course, we have the so-called Volcker rule, and you have a new push on customer protection. So a lot of these are really geared towards the largest banks, and so yes, there is a it's what I call the regulatory tax. That regulatory tax is going to be increasing, especially for some of the larger banks. Interestingly, right, some of the smaller banks are going to be excluded, probably almost totally, and the regional banks actually on a relative basis probably gain from this, because they also will be excluded from some of the harsher aspects of these proposals.
But overall, I mean, what should the banks be doing at this point? Do you know? I mean, it's not as if they can't be making money.
Well, you know, the banks actually, have a lot of, the wind is at their backs, actually. Despite this regulatory tax, which is a headwind, you also have attractive margins, you have a steep yield curve, you have credit costs that will be coming down as the economy improves. So the banks actually, again, they do have a lot of things going on in their favor. The regulatory tax is something that's going the other way. But we at Portales, we're actually looking for 2010 to be pretty good in terms of earnings for both the regionals and for the larger institutions.
Okay. All right, well, that actually seems to be a pretty common theme or agreement going on right now. Dino, thanks so much for joining us. Dino Kos of Portales Partners.